Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and we've wrapped up a very short and sweet week. On a very sweet note, so to say, given the fact that we saw the biggest gain in the market, weekly gain in over 2 years, 4.5% gain on the Nifty for this week. Friday to Friday, Friday to Thursday, so to say. Seems like Thursday is the new Friday. But today, of course, we saw a very strong up move. In fact, the Nifty reclaiming that 23,850 mark, which was being touted as a very crucial level. We've climbed past that level as well. And no points for guessing. It was a Nifty bank index that was all fired up. Banking and financial names have led from the front in this leg of the rally. And today, was evidence. Was stark evidence given the fact that we saw the Nifty Bank Index, closing above that 54,200 mark. In fact, we came very close to the 52-week high of 54,467 or thereabouts. We crossed 54,400, and we were just about 60 points short of the 52-week high. That's the kind of rally we've seen. And if you look at the top contributors on the Nifty, they will be from the banking and financial names like HDFC Bank, for that matter. Was among the top contributors today. So was ICICI Bank, and mind you, both the banks report their numbers on Saturday. So we will be reacting to that as well. One would have thought that the Nifty Bank Index would come close to 54,400 after these earnings, but it has happened before that. So ICICI Bank, HDFC Bank, these were among the top contributors on the Nifty. All the sectoral indices ended the day in the green. For the week, the Nifty Bank Index in particular is up almost 7%. The Nifty Realty Pack is up 7%. For the day today, all the sectors were trading in the green. IT, that was down 2.5% at one point, reacting to Wipro's bad numbers, so to say, poor numbers. But it came off from the day's lows and in fact ended the day in the green. So that's the kind of rally we saw. It turned out to be fairly broad based. 11 o'clock till then we were extremely subdued, but after that we fired up, and how, and look at where we ended the week. But without any delay, let me bring on board our guest for today. Joining me, Sudeep Shah, Head of Technical and Derivative Research at SBI Securities. Sudeep, lovely way to end a holiday shortened week, just 3 sessions. Given the kind of up move we've seen, the fact that we've cleared that 23,800 mark on the upside, should we say that 3-day week is a good idea going forward?
See, hand on heart, yes. 3-day week would be a fantastic idea. You work for 3 days, you see such kind of markets, make money and enjoy for the remaining 4 days. But yes, for saying this sentence, my bosses are not going to like this. So yes, I guess 5-day week is a normal week, and let's just keep enjoying these 3-day weeks as and when they come once or twice in a year.
Sure, but now that 23,850 has been conquered or reconquered, so to say, for the next week, how is it looking? Have we, seen a decisive trend reversal?
Yes. See, from a Nifty perspective, it's still not completely decisive, but the pullback is strong enough for us to at least believe that yes, now 24,200, 24,300 would be on the cards, and the January, the late December highs or early January highs also could be retested once. So what we feel is from the kind of strong weekly closing that we have got, followed by the last week's say 1100, 1200 point bullish candle. This is a follow up, and the volumes have been incremental, as well as if you see the broader markets with every passing day, yesterday, day before yesterday, and today, we have seen mid caps and the small cap side of the market also showing up decent traction. So all in all, if you sum up all these things, we feel that now 23,400, 23,500 will become a new base, and till this holds on dips, it would be a buyer's market.
Okay, that's the texture of the market. But how can we not talk about the bank index? Very close to 52-week highs. Two giants report numbers on Saturday. And some of these names are perched at 52-week highs already, right? The likes of ICICI Bank, even HDFC Bank for that matter. Anything that's catching your fancy at these levels? And, what kind of levels should one really watch out for here?
See, from a banking index perspective, it all started with last week when RBI went ahead and cut the interest rates. Then immediately post that, in the next couple of days, we saw the savings bank interest rate get cut by ICICI Bank and HDFC Bank. So both all these events in totality, along with some kind of calm in global markets with the tariff thing getting now on the back burner for another 90 days. So all these things have led to the spurt in Bank Nifty. And we feel from here on, Bank Nifty still could continue to be a guiding force, and 53,600, 53,500 now becomes a newer base. And on the upside, levels of 55,000, 55,800 also could be witnessed. Now, if you see the banking index, although we are still a bit away, 150 points away from the all-time highs, but from a closing basis, we have already closed at an all-time high. So we feel that from here on, it still would be a banking index that could outperform all the other index and could help Nifty scale up further newer highs.
Okay, that's the view on the Nifty Bank Index. Of course, the RBI rate cut and subsequently the deposit rate cut, fired up some of these banking names. But one bank that wasn't doing all that well today was IDFC First Bank. Of course, there's some news flow around this bank. It has approved an aggregate fundraise of up to 7,500 crore rupees from two separate investors. Those are Warburg Pincus and Abu Dhabi Investment Authority, and they will be investing up to 7,500 crore rupees. Management was on CNBC TV 18, and they pointed out that they reached out to these two investors as bank needed capital for growth, and over the next 4 years, they are expecting the balance sheet of the bank to double. Good comments coming in, and they wanted to be well capitalized to focus on building a good bank with good corporate governance, etc. But over the last 1 month or so, the bank, this stock has also seen a good move, although on a YTD basis, it is in the red. But any particular thoughts on where the stock is heading right now? I think it's somewhere around 62 rupees or 63 rupees. 86 is the 52-week high. Would you see the stock cover that distance anytime soon?
See, Nandi, the last few days price action in IDFC Bank, wherein it has held this 58, 59 zone, and we've seen this rally extend up to 63 levels. Now, this zone of 62, 63, in fact, sorry, 60, 63, 65 zone is a critical resistance. Now, right from November 2024, this zone was not able to get crossed, and the stock retested 54 levels, and now this is the pullback is what we are seeing here. So the pullback is good enough for 65, 65 and a half levels, but further moves will only come once the weekly closing of the next week comes above 65. Above 65, the next level that this stock could witness could be around 75, 77 levels. So 65 for me would be the most important number that I would be watching out on this stock.
Okay, that's a crucial level to watch out for on an IDFC First. But what do you do with all these IT names? They've been battered out of shape. If you look at the YTD performance, all these stocks like Wipro, TCS, Infosys, all of them have shed anywhere between 20 to 25%, but they've still not retested their 52-week lows, so to say. So on the charts, is there a chance of that happening? Because numbers are coming out and it ain't pretty. Today, of course, we are waiting for Infosys numbers to come out anytime. But what would you really do with these IT stocks? Do you think they are in oversold zone, or do they have to correct or see more downside to get into that oversold zone?
Nandita, view-wise, see, I'll tell you what we are thinking is that IT index still could consolidate here between this 32,500 and 34,500 zone. The chart is quite weak, although today from lower zone, it was the IT index which also supported Bank Nifty. IT index rebounded a good 800, 900 points from the lows of the day today. and recovered most of the losses in a lot of large cap names. But what still till the time the results of a lot of these mid cap stocks, the large cap stocks, which had been the flag bearers of the previous rally, now we need to see what kind of results come for this quarter also and for the next quarter also amidst all this tariff chaos. So I guess it should be a
Hmm.
wait and watch from an IT perspective, and just give it some time, let the results go by, and then we could reevaluate the situation, because the results in case of these IT companies are generally unpredictable, or the result reactions, I would rather say,
Hmm.
that is unpredictable. So should ideally viewers as well as investors or traders should just wait for a few days before taking any conscious call on the IT names.
Hmm. Okay, wait for a few days, but quickly just taking you through the Infosys poll. The numbers are going to come out anytime now. If you look at the estimates, this is the CNBC TV18 poll that I'm talking about. The fourth quarter dollar revenue is seen down 1.4% on a quarter-on-quarter basis. Constant currency revenue growth is seen down 1.1%. EBIT margin could come in lower at 20.7% vis-a-vis 21.3%. Profit, however, is seen up almost 7%. Uh, in terms of the constant currency revenue guidance, it is expected at 2 to 4%. A lot of these brokerages are also expecting somewhere around 1 to 4%. Whether or not Infosys gives guidance, what if they put it in abeyance in the wake of the tariff turmoil? We'll have to see. If they don't give a guidance, of course, that will be read as a negative, and of course, we'll see a dire stock reaction tomorrow. But yes, all in all, overall, that's the expectation we are working with. Let's see, any moment the numbers will come out, and we'll of course get you a breakdown of the numbers as well, with a couple of experts around 405 or 410 or something like that. But on a YTD basis, the stock of Infosys has tanked somewhere around 25% in tandem with what the IT index has really done. But another name that was in focus was Sonata Software. The stock slumped after the company issued a revenue warning for the fourth quarter. The revenue estimate from its largest client may be lower than expected, and that, of course, sent the stock tanking in trade. In fact, the stock was down somewhere around I think 6% or so, and on a YTD basis, it is already halved, almost 48% down. 315. Would you expect levels of 300 to be tested on a Sonata Software?
Nandita, the way the charts are looking, I fear that there could be still further downside in these names, in these kind of stocks, because see, if you see the chart pattern, the stock in December 2022, November 2022, it was closer to this 250, 280, 290 mark, and then it went all the way up to 850 in Feb 2024, and once again has corrected back to the same level. So these kind of chart patterns, generally when I
Hmm.
see, I feel scary. And because the way they've moved up, if the entire gain is given up, say in a period of less than 1 year, then that is massive price destruction as well as wealth erosion. So these kind of stocks never make you say money in the long term. It might act as trading bets for a while. They might excite traders for 5, 10, 15% gains. But yes, if I see the long term trend here, I feel that the stock is headed much lower. It could see some pullback because of the oversold nature of the chart, but nothing beyond a pullback. I feel maximum 350, 340, 350 zone can be retested if at all. It could bounce back along with other IT names. But the larger trend would be on the
Hmm.
downside, and any pullbacks should be used to exit the stock.
Okay, use any pullbacks to exit the stock of a Sonata Software. That's the view then. But let's also look at some of the capital market plays like Angel One. The stock did well to recoup most of the losses, and it managed to end flat, but it did have a knee jerk reaction to its earnings. Revenue, profit, margin, all of them declined. In fact, the company also lost market share in equity, F&O, and commodity segments. In fact, the company has said that client activity may remain subdued in the first half of FY26, and they see things normalizing by the fourth quarter of FY26. But given the fact that the stock saw a good run up of 13% over the last 1 month, even though it's down 20% on a YTD basis, would you say that the renewed optimism that we had seen over the last 1 month would kind of see a break here, or would you say that it was a knee-jerk reaction and on the charts it's still looking favorable?
Nandita, I've just missed the stock name. If you can just
Angel One.
yeah, okay. See, the numbers yesterday were below expectations, and we saw the kind of gap down opening, the stock reacting negatively on the downside. But if you see the charts here, March 2025, we have seen 1950, 1930 acting as a bottom. Also in August 2024, the same July, August 2024, the same zone acted as a strong support. So I feel, see, in a lot of stocks, these kind of major price points always hold out well. And we feel until and unless from a positional perspective, this zone of 2000, 2100 is not violated once again, we could see some pullback up to 2700, 2800 here. The reason is a lot of negatives are already priced in. The results also have been a testimony to that, and the post opening, the entire gap being filled, and the stock now at least being better from a extreme short-term perspective on the daily chart, gives me some kind of a hope that yes, there on the downside, the support zone could act well, and on dips there are buyers from a positional perspective.
Sure. Okay, that's the view on Angel One. But before I let you go, any picks for viewers heading into the next week?
See, so from a positional perspective, there are a couple of stocks that are there on our radar. The first one is, say, NBCC. On the weekly charts, a strong pullback. In the last few sessions, we have seen PSU stocks making a strong statement, and NBCC is one of the key stocks right now, which in the last rally had done well. This time also, it is rebounding from an important support zone. So,
Right.
so sorry. So we expect the stock to do well from here, and the stock to retest around 110, 115 levels. And this can be bought with a stop loss at 93 on the downside. The second stock which is there on our radar is Bharti Airtel. Now, a strong weekly closing, a strong monthly closing. And from the current levels, we feel the stock could do well up to 2100 levels from a positional perspective, and can be bought with a stop loss at 1800 on the downside.
Okay, NBCC and Bharti Airtel, two recommendations coming in from Sudeep. With that, Sudeep, would like to thank you for taking out time and joining in this afternoon. Always a pleasure. A good end to a holiday shortened week. Let's hope the momentum continues next week as well. And I hope I meet you with good news, on the market front next week as well. Thanks a lot for joining in. Thank
Absolutely. You. Thank you so much, Nandita.
Thank you. Well, with that, we've come to the end of Closing Bell. Thanks a lot for tuning in. But stay tuned. Don't go anywhere, because within the next few minutes, when Infosys comes out with its numbers, we'll be getting you a breakdown of the numbers with a battery of experts. Thank you.